Alright, what's up YouTube? I am back and I hope everybody had a good day today. I had a pretty nice game, but somehow the market turned me back down. So I finished down for the day and I'm still down after hours. So we're gonna get straight into Apple. The Apple event, nobody really liked the phone. Going into the event, the stock, it was up and down. And then towards the end of the day, the stock shot up. I was in at 107.89 and I was in for a couple of days. So this gain right here took me about 2 days. So from 107.89 and sold at 108.24, which is a pretty nice gain for the day. And people really didn't like the iPhone because they knew all the features and everything it had with it. So it wasn't a surprise, and I'm not sure why it got a bid after so long. Even after the event happened, the bids started to come in, and then after a while, it started to tick back down. And then the next day, you see analysts knock the stock down with a downgrade, and that's how the market works. All right, and next we have the TQQQ. I think T triple Q, and pretty much it just follows the Nasdaq return. And what the TQQQ follows is the QQQ, and what the QQQ follows is the Nasdaq. So the T triple Q will just give you triple times the return for the triple Q, which is following the Nasdaq. To clear that up, I didn't understand that there was a head and shoulders pattern when I bought into it, because when I was buying the stock, I was in the middle of class. I was like, okay, Nasdaq's having a down day. I know it's gonna rest to retest, and it's having record days for a couple days in a row. And the next day, I see that I'm down. I check out the stock pattern, and it's forming a head and shoulders, and the head and shoulders just the head being the top of the stock, and the shoulders being the side, and the side are just the ceilings for left and right. And typically, what follows a head and shoulders pattern is a downtrend, and the stock got hit hard today. So that was one loss that I took. I think I took almost $3 to $2 a share. Uh, and I don't want you guys to be discouraged about your losses or how bad you lost, because the next day you can always make up for it. So when I mean tropical storm, um, all the gas refineries were shut down. Oil refineries were shut down. That's why the number was so low this week. There was a tropical storm forming. I talked about it in my last video. It really stopped the production for oil and gas, which you see the huge spike in natural gas. As you see, I have my uptrend pattern going following all the way from 260 all the way to 270, and from the 270s we break out into the 280s, the high 280s, and after that we start to come back down today. So when you get those inventory reports, please make sure you're paying attention to them. Make sure that there's always less inventory than expected or more inventory than expected. Depends on if you're shorting the commodity or if you're buying the commodity. That can help out a lot. Also, oil and gas really spiked. Well, oil really spiked. It was up almost $2 in one day, and now it's back down. It's going to trade in that range from 47. One of the floor traders told the audience watching CNBC is just when it hits 48, or when it gets close to 48, that's when you want to sell oil. And as you see, it got close to 47, and now it's falling back down. So if you're watching CNBC, make sure you're paying attention to every single thing that these floor traders and commodity traders are saying, because they are the ones that are buying the stock. They are the ones that are moving this stock. They're the ones that get those call orders to go ahead and place the order for the stock on behalf of somebody, or if they want to buy from themselves. And sometimes you might get the market maker in there, and he'll talk about where the price is going or what he's seeing in the market. So make sure that you guys are paying attention to that. I know they won't actually show that on CNBC. They might, but all the time most of the time they won't show what a floor trader is really saying, unless it's a investment firm guy or a hedge fund guy talking about where he think is going. It really doesn't matter where he think is going. Only thing that matters is if you get one of those floor traders on the on the floor, telling you where they think oil or gas or platinum or silver is going. Those are the guys that you want to pay attention to, not the investment or hedge fund guys, because their average rate of return is very low, and they are looking long term, 6 months into the future. Right now, we're looking for what a couple days into the future. We're looking for quick gains. They're looking for subtle gains. 3% moves in stocks in 3 to 6 months. I'm not looking for that, and I hope you guys aren't looking for that either. Maybe if you have a large enough account, but if your account is very small and you want to grow it very quickly, I want you guys to think within weeks, or within a week, or within 2 days, or within one day, or within 5 minutes. Where is this stock going to be? Where is this going to take my account balance? And that's what you have to pay attention to in this market. That's what you have to pay attention to when you listen to the market analysts when they talk about these stocks. Sometimes they get day traders, but most of the time, it's always those investment analysts that are looking years into the future, or 6 months or more into the future. And I also have sad news to tell you guys, or sad news for me at least. Today, trading this stock right here put me in the pattern day trading rule for on Robinhood. And right now, I'm going to downgrade my account to a cash account, so that way I'll be able to trade every day. But because I really don't want to wait 90 days. It's going to be all the way in December. So many bad things can happen. So what I'm going to do is just downgrade to a cash account, and with cash account, I'm going to have to wait 3 days until my money is settled. And that really doesn't matter to me, because I can just break my account up into, smaller pieces like I did when I worked with a $20 balance. And it's going to get me back to, winning more and seeing bigger gains. So with this stock, the only reason it was down today is because it was talks of it getting delisted, or it might get delisted, or it is getting delisted. I really didn't care about it getting delisted, as long as I wasn't holding it for more than 3 days. I really didn't care about what this company was, what did the company do. I was just trying to make some money here, and that's exactly what I did. I bought on the dip, and I wasn't able to get at 11 cents because I was still a little sketchy that the stock could go even lower, the way to look, because the spreads were way too far apart. It was 11 cents on the ask and 14 cents on the bid. So I had to wait till it came down just a little bit more until the spreads tightened up. Once the spreads tightened up, I bought at 13.86 and sold at 14.5. I made a nice small gain on that, and the market just erased my gains pretty much. But I made a nice small gain on that, only because I was not gonna stick with the stock just because it was down. I didn't check the 20-year. I didn't check the 20-year chart. I didn't check the 10-year chart. I didn't check the 6-month chart. All I did was check the 1-minute chart. 1-minute chart for one day, and see where this stock was going. And I knew the stock was gonna go up, because you're gonna have those sellers. Those sellers are gonna come in because they're talking about their stock getting delisted, and you're gonna have those sellers come in, and they're gonna start dumping stock like crazy, which brings up the RSI. There's gonna be too many sellers, and the RSI is gonna be ringing like crazy. Now, once the RSI rings like crazy, I'm getting ready to buy it, because that's when you're gonna start seeing people buy when other people are selling, and it's gonna start bidding up the stock, and which it did. So it turned into gains for me. It just couldn't break through 15 cents. If it broke through 15 cents, I would have probably held it longer, all the way to 16 cents, or maybe in between 15 and 5. I would have, chose my exit point then. But I wasn't really trying to stick with this stock for more than 15 minutes. It was very dangerous. The spread was very wide. And after I sold, the stock went up just for a little bit. 14.7s were coming in. I wish I would have, sold at that price. But the stock started to tick back down, all the way down to 12 cents. And from the 12 cents, it went back down to 11 cents. So you have to be very careful when you're holding these stocks. And I'm just getting news everywhere that the Fed might raise rates, or, they brought the stock market down almost 400 points. So make sure you guys are being careful. The VIX, it almost shot up 40% today. So if you're watching your RSI, you should have known that. You should have gotten to the VIX at $18. That would have been your entry point for the VIX at $18, and you'd have had a huge gain for the past 2 days. So if you're following the RSI or whatever you find that works, or you want me to check it out, or you want me to use it, just comment on my video below, and I'll try to use it and see if I can trade with it, and I'll post my results or post my review on it. And also, we're gonna bring it to the TPLM breakout. As you see, I put my price level. My price level was set from yesterday's highs. So as you see where I have the gold, the gold line, that's what my trend line is for yesterday. So that was yesterday's high, and I put a price level over that. And once I seen that TPLM was breaking above that, that's when I knew it was a clear breakout, and the stock did not give up. It ran from whatever the low was all the way to past 35 cents, and that's when I knew that TPLM was clearly breaking out once it broke above yesterday's highs. It's a clear breakout, and when you get those type of things, you have to buy those, because you don't know how far the price is going to go up, but you know you're going to get a gain. And I know the RSI is going to, the RSI is going crazy. You see it's 74, but who cares? It's a breakout. That is a good thing. It is momentum in this stock that's going to keep it running up. You have a lot of, you have a lot of buyers, not a lot of sellers, and that's going to keep you making money. When you get those breakout patterns, of course it's going to be overbought, because people are going to try to buy the breakout, this and that. But I want you guys to be, positioned before the break. If you can get in before the breakout, I know getting in before the breakout is very dangerous, because you don't know if a lot of buyers are going to start buying that stock at the, at resistance. But a lot of people bought the stock at resistance, and you see them break through. And typically, like I said before, what breaks it out of resistance is when you have those long gapping candlesticks. Long gapping candlesticks are what breaks it out of resistance, or what breaks the support. Remember that. Whatever breaks the support and resistance are long candlesticks, whether they're red or green. That's what breaks them. Alright, that's it, guys. That's all I have for this week or today. And if you're not subscribed yet, please hit subscribe and be posted for more videos. Thank you.